All right. What's going on, TWP fam? It's been a while, and my screen looks chaotic. Trust me, I understand. Sorry for the whispering. It is 11 o'clock at night, and I'm trying to make this work. So, I know I haven't been on this channel in a while. It was simply because I felt like I was going in circles with posting the same kind of content, but not actually having direction on where I was going with the content. Like, I felt like I was showing you guys something, but then I would forget what I showed you and unintentionally repeat the same video. So now I have some sort of direction, and now I have an actual series that I would like to play out. So I know my chart looks chaotic, and I'm going to get into it on this video because really we only have 1 hour left of this session anyway. So I'm not going to start today. So like in this video, I'm just going to explain why my chart looks like that and then what we'll be looking forward to going, for the next videos coming up. So if you're new here, welcome to my channel. I'm just a girl trying to get to that financial freedom, that time freedom, basically being able to do what I want to do, when I want to do it, how I want to do it without having to check my bank account to do so. If that's something you're into, stick around. I think I might actually know how to teach you by actually teaching myself. If you're not new here, basically erase everything that I posted before. I had a good idea, but it just wasn't put together just yet. All right. So this series is going to be called ICT Strategies Asia Session Style, because I still have my 9 to 5 and I still need that in order to, pay my bills and make sure I eat, put some gas in my car. So that's not going anywhere anytime soon. But in order for me to get to that time freedom and financial freedom and becoming that full-time profitable day trader, I got to start putting some sacrifices in there. So the Asia session roughly runs from 8 p.m. Eastern Standard Time to 12 a.m. midnight. I can't promise that I'm going to do the whole 8 to 12, but I can surely try. But we're simply looking for a certain reaction in the market in order to take a trade. If I do not see that trade opportunity, then there is no trade for me. Now, sometimes I have off days throughout the week where I could potentially look at the New York session. However, so far, I've learned that when I jump around and try different time zones and different trading sessions, I just get confused and I'm just looking for anything to trade. And I've been doing this since the beginning of last year, and I've gotten nowhere by jumping around. So now it's time to get locked in and stay focused and actually collect enough data to see if a strategy actually works. What is the strategy? Well, if you don't know what ICT concepts are, I had chat explain it to me as if I was a third grader, because, sometimes you just got to go back to when you actually remember learning something and how did it stick to you. So for me, that's third grade. And so chat said ICT is like playing hide and seek with your money. Have you ever noticed that when you get into a trade and you put your stop loss somewhere, it really looks like the market is out to get you? Like they purposely go towards your stop loss, and then they go to your TP target. That's what hide and seek is. That's what ICT is. It's basically the banks knowing where the obvious spot is to put the stop loss, which is where you obviously put your stop loss, and gets your money first before actually going in the direction that you knew it was going to go. Now, that one's a killer because all last year I was like, there's no way. I was flipping tables. I wasn't really flipping tables, but I was getting so upset because I was like, there's no way the market just took my money and just went towards my TP target. I was getting so angry. But there's nobody you could actually get angry with when it comes to the market. The market owes you nothing. And when you start to realize that, you start to get smarter with your decisions. And so ICT concepts basically help you figure out where people are probably sitting at with their obvious stop losses and where the bank is mainly likely to go next. And so, like, the biggest thing that I learned is, because I watched the ICT mentorship, is before a price moves drastically, it's going to go on a stop hunt. So just think about it. Before it goes in your direction, it's gonna go look for your stop loss first. It's kind of like the game of Minesweep. You know, you're trying to find what not to hit. They're trying to find what to hit. They're looking for you. And the sooner you realize that, the sooner you can figure out where not to put your stop loss. Or the sooner you realize to stay patient enough, let them hunt the people that don't know this just yet, and then get in with them. How do you do that? I'm glad you asked. My screen looks chaotic because the way ICT works is they use words like buy side liquidity, sell side liquidity, previous day lows, highs and lows, and fair value gaps, inverse fair value gaps, and basically just terms like that. So I'm going to try to simplify it the best way I can because, well, I'm still learning. That's why we're testing this strategy together, and we're trying to get back on this YouTube channel and become more consistent. So the best way I know how to show you is, let me get it up on my screen. Little text bubble. Already got it saved. These are the session times. Go ahead and pause it. Take a screenshot. Get your notebook out. Write these times down if you're Eastern Standard Time. If you're not Eastern Standard Time, I'm sorry. Just, go to Google and be like, hey, Google, what is 8 p.m. in your time? And then, so on and so forth. But this is the time for me. So pause it, screenshot, take a note, pen and paper, whatever you got to do. Write these numbers down. Secondly, let's get another one. Another little text bubble here. I'm going to move this one out the way. That just got rid of my original one. Don't worry, got it saved. Pause it, write it down. I'm going to give you examples, but these are the templates that you want to save. So like with your trend lines, these are the lines you want to save. Make sure they are different colors so that way you could differentiate, so that way you don't have to scroll all the way back to see which one that was. Now, my New York AM and New York PM are the same colors because that one doesn't really matter to me as long as I know that it was the New York session high and low. Screenshot, cool, bam, let me know when you're finished. Go ahead, take your time, I'm not rushing. Okay, I'm glad you got it. All right, so we're going to get rid of this. It's okay, rewind. Be like most people rewind it at this time anyway. All right, so now let's get into it. If you don't know what a fair value gap is, let me go over that quickly. Basically, a fair value gap is a gap where the first candle and the third candle do not cross over into the second candle. What does that mean? I can use an example. Let me find one. Here we go. Stick with me here. Don't get dizzy. All right, so we're going to call this candle right here. Let's get rid of the magnet. We're going to call this candle number 1. We're going to call this candle number 2. We're going to call this candle number 3. Before I even tell you what a fair value gap is, can you see it on your screen? Can you see something obvious on your screen? Go ahead, take your time. Okay, if you notice that there's a gap in between this candle and this candle, you are correct. This candle, and you know what, let me just use a line. Bring the magnet back. This candle stops right here, right? This candle stops right here, right? They do not intersect in between this candle right here, creating a gap. That is called an imbalance in structure. That means the buyers pushed higher than the sellers had an opportunity to test that price out. So you would take a rectangle box. I'm not sure if you saw it in the templates to save. I hate that button. We're going to try again. You're going to take a rectangle, take it from the top of the wick of the first candle, meet it up with the third wick of the bottom of the third candle. You're just going to move it over. And that, my friends, is a fair value gap. It went away because, well, sometimes the settings are just different. I don't know why it went away, honestly. So, we're going to leave it like that. We're going to type in FVG for fair value gap. You can make it whatever color you like. Doesn't matter, as long as you know it's a fair value gap. So now, why is this important? This is important in ICT because if we want to know where people are hiding before the bank goes to where we actually want it to go, this is a magnet. Price will want to come back and rebalance the structure before moving either further up or further down. What makes a fair value gap valid? As long as it closes in the box or above the box and continues in the direction it was already going, then it is a valid fair value gap. If the candle, like the body of the candle itself, closes below the fair value gap, then this fair value gap is now invalid, meaning that the next candle would probably have been a red candle. So even if the candle wicks all the way out of the fair value gap itself, as long as it closes in or above the direction it was already going in, it is still considered a valid fair value gap. Bam. Not trying to make this video too long. Don't worry, we got long videos coming your way. Stick around, find out. We're trying to see if this strategy actually works. So now, the next big question would be, why would I even waste my time to figure out if this strategy actually works? I'm glad you asked. Because so far, this strategy actually has worked for me once. And because I saw it happen once, I feel it is possible that it can happen again. So let's go over that, shall we? So It was Sunday night. Market had just opened. And so the night before, I try to mark up my charts before the market opens so that way I'm not clustered and flustered trying to figure all this stuff out beforehand. So if you see on my screen, I got the all-time high of NASDAQ and I got two fair value gaps. At the beginning of the week, they were both unfilled. And unfilled basically means nothing ever came back in to balance it out. But you can see this one did get tapped into. So now we're on a 4-hour chart. Let's break it down to a 5-minute because that's where I ended up taking the trade. I originally looked at the 30-minute, but my forecast is on the 5-minute. So let's just go back. So remember that unfilled gap? Bam, it's right there. Right underneath is the second fair value gap. And we can see that it tapped in right there. So that was market close on Friday. Market closed all the way down here. It created a new fair value gap on the hourly time frame. And it came up into it and it respected it. But I got in a little bit later because, well, you remember, I work my 9 to 5. I can't exactly get on my phone and trade while driving. Would not be recommended, would not be safe. But you can see that I got into the trade. I put my stop loss right above the fair value gap because if it did go in that direction and it took me out, well, then it just wasn't my trade. But it respected the fair value gap, came right back out of it, and it smashed my TP. So because I saw that it worked, I now know that it's possible. I just have to wait for the setup. So, makes sense now? I really hope so. Because, I don't mind talking to myself, but hopefully, I start to get some intriguing, interest into these videos. If not, they only help me in the long run. But yeah, hopefully this makes sense. I'm not trying to make tonight's video very long because it is 11:14 and I did basically miss the whole Asia session. And yeah, so now that I know that this works, now I'm just continuously waiting for an opportunity to take this kind of setup again. So now we're going to fast forward. Now you understand why I have a whole bunch of lines and fair value gaps on my chart. And this is where we are right now. Yesterday, this was the New York PM high. It has yet to be taken out. And basically taken out just means the banks have yet to come up there and either take out the people that have stop loss sitting there, or if there's enough pressure, it'll just break through. And that is called a liquidity run. A liquidity sweep is when it comes, taps, and then flushes. And originally, if we go back to I want to say the hourly, originally when I had this setup chart, I had the chart set up, this was my fair value gap between here and here. But then when the market opened tonight and it completely obliterated it, it then turned into an inverse fair value gap. And an inverse fair value gap basically means it just wiped out the first fair value gap and now it's going to a different direction and now it's an inverted one. So now essentially all I'm waiting for, which doesn't look like I'm going to get it within the next 44 minutes. But yeah, I would be looking for a tap into this, a respect into this, and then a push higher, maybe possibly going towards all-time highs, because we're getting closer to that fair value gap that was tapped in once and the unfilled fair value gap that has yet to be touched in. Now, the more untouched things, the more it becomes a magnet, I would say. So just try to remember that. Really hope I drop some gems tonight. definitely cannot wait to get the ball rolling of consistent data tracking because I'm ready to lock in. I'm ready to just be on my computer for an hour or two, make some money, and live. But yeah, thanks for watching. I'll go into more detail tomorrow. Tomorrow is Thursday, so we'll be on Friday's Asia session, and we shall see. Peace.